Rachel Reeves, the UK's Chancellor, started the autumn budget on Wednesday the 30th of October 2024 by stating that it would increase taxes by £40 billion, which, to put it into context, is apparently the largest ever increase in cash terms. The proportion of UK's income going to HMRC and therefore being taxed as a percentage of GDP will reach 38% by 2030, which is the highest since World War II. So there is a large increase in tax, but also in spending, which a lot of people will claim is needed, given that the UK has the lowest rate of private business investment of any G7 country as a percentage of its economy. But the question to ask is whether this increase in spending will lead to growth, because there are concerns about GDP growth slowing down in future years, according to the OBR report, which is the Office for Budget Responsibility. But there was some positive news here in the budget, such as an increase in investment in R&D. So we've touched on increased spending and tax, but you can also see here that there will be a large increase in borrowing following the autumn budget. And borrowing is increasing by £32.3 billion per year as an average over the next 5 years, again according to the OBR. And we know what more borrowing means ultimately: higher inflation, the devaluation of fiat currency, in this case the pound, and higher asset prices. There were other notable announcements in the budget, such as a large increase in national insurance contributions by employers, which will impact businesses and will therefore impact workers in return. I obviously can't cover every decision in this video because I want to get onto the changes that affect crypto investors, and in particular the increase in capital gains tax. But we can look very briefly at how markets responded to this news, with the UK 10-year gilt yield increasing following the Chancellor's speech, similarly to the 2-year gilt, and the FTSE 100, which was down 0.71% in 24 hours and 1.17% over 5 days that you can see here. So a small indication of the response, but certainly nothing compared to the mini budget of 2022. But what is the impact on crypto investors? I'm recording this on November the 1st, 2 days after the budget, and I'm pleased to welcome back Jamie Nuttall from Miner on this video to have a discussion on the crypto tax implications, given that he is a qualified accountant who works every day with crypto taxes. Just a reminder that nothing contained here is financial or tax advice, and let's jump straight in and speak with Jamie. Hi Jamie, thank you very much for jumping on the channel again and joining us for another video. Really big thank you from me and from the viewers for all the knowledge that you've shared in these crypto tax videos that we've done that have been really popular. Obviously today we're talking about the autumn budget, which took place on the 30th of October. To start with, I'd obviously just say that anything that we share is not financial or tax advice, but we did do a video on our predictions of what would happen in the budget. What do you think in terms of the outcome versus our predictions and the madness that we came out with?
Yeah, so thanks for having me again, James. Genuinely, I really enjoy this. Love speaking to yourself and all your viewers. The video was a good video from what I understood. It seems to have a lot of viewers and comments on, and lots of people talking about it, which is exactly why I personally do these things, to get people talking about tax and figuring out what to do. In terms of the predictions, the main ones were an increase in taxes, which we pretty much knew. The expectation from my end was that they would be up to 39% tax. And as we found out a couple of days ago from this recording, it has only gone up to 24%, which personally, I think it's great. I don't think it's too bad. I think what's happened is they've managed expectations with the nation extremely well, whereby professionals like myself has gone, you know what, there's a good chance that this is going to happen because of X, Y, and Z. And then they've brought it down where with a effective 20% increase in taxes for the higher rate from 20% to 24%, we've gone, oh, thank you so much for increasing our taxes rather than kicking off about it. So I suppose that's the biggest change there. There were talks about an exit tax potentially being on the cards. I wasn't too confident on it, and that's so far not come to fruition, which is great. We do have an excellent statutory residency test system at the moment. Unfortunately, one of my predictions did come out to be true, which was it would be effective immediately. However, because of the increase being much smaller than anticipated and that we feared it was going to be, I don't think it's going to make that much of a difference whatsoever. I haven't heard anyone kick off about it just yet. To be perfectly honest, I'm a bit annoyed at the live budget announcement because it was very clear that stamp duty land tax was going to be increased and brought into play the following day. Whereas with the capital gain announcement, it wasn't very clear that it was brought in immediately. I think the words were something along the lines of, I will now increase capital gains tax to 24%, blah, blah, blah. But in my mind, if someone says, I'm now going to do this, it doesn't mean right this second necessarily, you know? So it wasn't exactly clear, which is really annoying, but not the end of the world. So from what we thought could happen, most of it didn't, and that's a positive. But I think a huge part of that is management of expectation, which would be expected, I suppose.
Just to clarify kind of what my thoughts are, it's obviously gone up, so it's not a good thing. But as you said, the perception was it was going to easily go into the 30s in terms of the percentage. So 30, 33, 35, 39%, something in those lines. So going from 20 to 24% is a smaller increase. So it's positive. And the increase is immediate. So what that means, correct me if I'm wrong, but from the 30th of October, any crypto capital gains that you make will come under this new percentage.
Yes, so it's not completely 100% clear if it's from midnight or 10 a.m. or anything like that, but it is from that day, the 30th, at the moment of the budget. Usually speaking, I expect a few hours, but at this point, it doesn't really matter. It's in from that day. Think of it as a bonus if it's not in from midnight. In terms of the actual percentages going up, so higher rates went from 20% to 24%, which is a 20% increase in itself, if that makes sense. One thing that is good to point out is the basic rate percentage going from 10% to 18%. That is an 80% jump, which I did not anticipate it being a Labour government for the working people and that sort of twist and marketing. I would expect from them to lower the basic rate band for the working people. But they've increased it by a bigger proportion, i.e. 80% than they did for the higher rates, which is very surprising. Now, before your viewers kick off and hit the comments on it, I get it. But please remember, this is a tiered system of taxation. So, for example, if you were on £30,000 a year and you earned £30,000 worth of gains, roughly speaking, I'm rounding here, £20,000 of that would be at the basic rate and the balance would be in the higher rate. Now, for someone who is on the average wage in the UK, I think is about £35,000 from the top of my head. To be perfectly honest, we're in such a state in the economy now, I very much doubt we would have the spare cash to be investing anywhere, let alone into the crypto space. If you are, great, fantastic, you do you. I'm not a financial advisor. But with inflation and the cost of living being the way it is, I can't imagine many people would be in that position. So what this means is, although the basic rate band has increased by an effective 80% to what it was before, I don't think many people would be paying that bracket or tax. And if they are, it would be a very small amount. So that 20 to 24% is going to be more relevant for most people. Question I do get quite often since our last video, actually, if you don't mind me just debunking it very quickly, is the tax going from 18% to 24% now. If you are in the basic rate band bracket up to 50,270, I believe, it doesn't mean the whole of your capital gains will be at 18%. It's only the proportion that falls within it when you add that on top of your other income. Okay, so we'll be very clear. If you earn 100k in gains and you earn 40k in PAYE, 10k roughly will be part of that basic rate band at 18%, and the rest will be at 24%. It doesn't mean all of it goes into that bracket. So just want to be clear. I've had that tweet and I've seen comments about it. So just wanted to direct that.
Yeah, definitely. I think there's two things to unpick there. The first thing is I've had a few comments and a few messages with people saying exactly the same thing, that the increase at that basic rate, at the lower rate, going from 10% to 18% does go against that idea of increasing taxes for the rich and almost like a wealth tax. Because if we're being honest, at 50,000 something, and I'll cover some examples at the end of this video to go through the differences of what the tax might be and the increase at the different bands, in case that helps. But really, someone who's, if you're adding your crypto gain to your income, if you're underneath that 50,000 kind of banding, you're not a millionaire, you're not super wealthy in that way. So it does go against it. And the other thing, I just wanted to explain what you just talked about in terms of the layering of how it works. If you said you earn £30,000 a year, but your gains were higher, 50,000, then even though you're in the, like, let's say £80,000 total, that falls into the higher rate. So that would be 24%. What you're saying is because the PAYE, because the income was 30,000, that person still has 20,000 left to reach the higher tax band of 50,000, whatever. So £20,000 of their crypto gains, you're saying, would be taxed at the lower rate of 18% after the 30th of October. But then anything above that would be the higher rate. Is that correct?
Absolutely correct. One thing I do want to add is the annual exemption amount of £3,000 tax-free per person. But yeah, pretty much spot on.
Perfect. So that stayed, isn't it? The AEA of 3,000 that people can take off their gains.
Yeah.
That stayed, isn't it?
Yeah, so 2025 tax year is £3,000 tax-free per person. 2024 tax year was 6,000. 2023 tax year and prior for quite some time was 12,300, I believe. So significant decrease there. But as far as I can see and what I've heard and read, there's no changes there either. So we'll continue to make use of that. I'm hoping it'll go up at some point, and that would be a nice help for the working person, as however the Labour government has now, explained that meaning. It would really help that particular category of personnel by extending the annual exemption amount, which it's a shame they didn't.
Yeah, definitely. I think that was one of my suggestions in our prediction video. Well, it wasn't a prediction, it was a suggestion. And I said, what about they might lower it even further? And I think you laughed at me. So
I'll be really annoyed if they lower it further, and I'm hoping for them to expand it at some point. But yeah, it's like you said earlier on, it seems there's a very counter narrative here. It's like a juxtaposition on, we're here for the working people, but, and there shouldn't be the word but full stop, but there clearly is.
Yeah. Like the national insurance contributions for businesses, which is separate to crypto, but that will impact workers because obviously it impacts businesses who employ the workers. But
yeah, absolutely. Can you imagine if you're in the situation, and you have to bear in mind this will affect different organizations differently depending on how big they are. But say you're in a rather large organization and you go, I'm looking for my 5% pay rise per annum, whatever, maybe a bit extra because I did that, this, that, and the other. You're going to end up with another conversation about, oh, hold on, the cost of employment has gone up. We can't afford this anymore. And that's, understandable. I'm not saying it's right or wrong. It's just the facts of the matter. And for the average worker, you're going to be sitting there going, well, hold on. So although my tax rates haven't gone up, the cost to employ me has gone up. So therefore, I'm not getting a pay rise. And, and it's like a stealth tax, if you like, potentially. So the other thing that you need to take into consideration is that the employer's allowance is going from £5,000 to £10,500. So again, depending on the size of the organization, how many employees you have and all that, it might not be as bad or even potentially better. So I'm not an economist. I'm not going to be crunching the bigger numbers in total to see, exactly where it is. I will be doing the smaller numbers in due course. But yeah, lots of knock-on effects for those in the space. And if you don't get a pay rise and you get this sort of stealth tax, there's less money for you to then invest anywhere. And as this is a crypto channel, we're going to talk about crypto specifically, less money there. And then you're in this cycle of, not being able to do what you want to do. So lots of small implications. Genuinely speaking though, James, overall, with this budget, it's been extremely boring. And it's fine. Boring is good when it comes to the budget. It means we're not rocking the boat too much. So personally, pleased with it. Could have been worse, could have been a lot better, but yeah, it's okay.
Yeah, I think I'm in an agreement that it was going to increase always, but it's not increased to such a level. If we bring it back down to the tax increases, again, capital gains tax for crypto investors, if we look at the higher rate, so we've gone from 20% to 24%.
Yep.
And again, I'll go through an example of that at the end of the video, but I think this was one of the only things that we didn't predict in our video originally, which was that this was going to be brought in line with capital gains tax on residential property.
Yep. So I was so, and many people in this position were extremely sad to understand that the expectations were a large increase. Where that came from, who knows? So we talked about how there would be an additional rate band, so it'd be 10, 20, and then one more, which could be 30. We talked about how it could be in line with income tax, so it's 20, 40, 45. Talked about how it could be in line with dividend tax, 8.75, 33.75, and 39.35. And at no point did I, you, anyone else, to be fair, go, you know what, it could just be in line with the residential capital gains tax rate. Not many would have done anyway, but pleasantly surprised.
Well, yeah, no, definitely. But it's how they're increasing the revenue, isn't it? Because the OBR said that just the capital gains tax increases from 10 to 18, from 20 to 24 will raise £2.5 billion extra, apparently. And even on residential property, so we're looking at buy-to-let, second homes, those kind of things. Although the capital gains tax has stayed the same, there is a stamp duty surcharge on these. So they've increased that from 3% to 5%. Yeah. So they are still making their money in another way, which is kind of alluding to what you said before.
Yeah, the stamp duty increase from 3 to 5% was welcomed, I guess, because they've got to get their money somehow. There's a £40 billion black hole that they've inherited, supposedly. I haven't seen any of the figures. There is talks about the transparency of all that, with a line-by-line breakdown being published soon, which will be great to see where it's come from. And this black hole needs to be filled over the next few years. And their budget and expectation for that is for, I think, 28, 29 for this to be in surplus, which is great. Surprisingly, with the capital gains tax increase, it's only 2 billion, but that's a very small drop in the ocean when there's a 40 billion pound black hole. So exactly like you said, where are they getting this from? I don't really know just yet. I'm waiting for the expert economists to kind of break this down and figure this out and do videos like this. The stamp duty land tax is certainly one of it, and to tax those who have multiple properties makes sense to a certain degree, most certainly. Because those people would certainly fall within the wealthier bracket than those on 30 grand a year with a little bit of crypto.
Yeah, no, definitely. So I did read in an article, we talked about this before, it's a bit of a trying to find a headline, I think, but they have come out by saying that capital gains tax, even with these increases, is apparently still the lowest of any European G7 economy. And we have to caveat that a bit in terms of like France, Germany, Italy, really being the only countries up there in the G7. So it's a bit of a hard one. And there are different rules. So as we know, we've talked about this before, and we can't go into specifics. But for example, if you hold crypto in Germany, there are different rules if you hold it for a certain amount of time. Exactly. Portugal, there are, again, different rules if you hold crypto. So I think it's trying to find a headline.
Yeah, I agree, because we had a quick look at this before we started the recording, and I also looked up the tax rates in Europe as a whole, and that headline would not have been as lucrative, shall we say, as the one that you found. So it's not great, it's not horrific. We have to remember, with the UK, we do have a lot of benefits for living here, and I know I can hear the comments now going, "No, I'm leaving," and that's fine, but it's somewhat safe. You know, we've got our taxes go towards a network system in the country that is dominant in the world at the moment, at the very least. So I fully do expect there to be, you know, slightly higher taxes, I guess, than other places. But yeah, I'm not a fan of that headline. I think it's misleading. The lowest capital gains tax rate in Europe for the G7. There's too many caveats for me, I'm afraid.
It is a bit specific. Let's do a bit of a recap. So we've said it's an immediate increase from the 30th of October. Yes. These capital gains tax increases have come in straight away. They're not coming in April for the new financial tax year. The AEA, or the annual exempt amount of 3,000, still applies. So you can take that off your crypto gain. I can't remember if we said this. You can still gift your crypto to a spouse or civil partner.
Correct. Yeah. So we haven't commented on that, but that's been the case for a while, and I can't see that ever changing, not for a long time. So that's still in. You can gift spouses, so your wife, civil partners, you can gift them as much as you like.
I'm including this in my example at the end. If you gift your crypto to a spouse or civil partner, they can then use their AEA.
They will be able to use their annual exemption allowance by disposing of said assets.
Yeah. So that's what I've done in my example. If we talk about income tax, because most people don't necessarily assume that applies to crypto, but in our videos, we've talked a lot about miscellaneous income tax and how that applies. Income tax has stayed the same. So what are the potential implications on crypto?
So income tax stay the same at 20%, 40%, 45%. Ignore national insurance for now. In terms of miscellaneous income, that will go by those brackets without national insurance. That will stay the same. How are you, a crypto investor, going to be exposed to that bracket? A couple of ways. Number one is staking, rewards, airdrops. These are all going to be under this miscellaneous income section and therefore under the income tax regime. Please remember that, guys. Don't be putting it down as a capital gain. It's not the case in pretty much any case. Now, when you sell those assets later, it becomes a capital gain if they go up in value from the amount that you received them at. So that's when the sort of step of complication happens. Nothing really changes from what we spoke about before. Just please remember, we've still got that trading allowance of £1,000. So this is instead of expenses. Most people who get rewards and staking and maybe airdrops probably don't have any expenses anyway, so make use of that £1,000. And what it effectively means is the first £1,000 you earn, you don't need to tell HMRC, you don't need to report it, you don't need to pay taxes on it. Anything above that, that's when you need to start doing your tax reconciliations, talking to experts like myself or anyone else in the industry that has been here for a while, and start to figure out where the tax comes in with it all. Because even after that £1,000 trading allowance, you still have your personal allowance, which is tax-free anyway as well. So again, depends on your total situation.
Yeah, definitely. And I think there's one thing I missed out on my summary, which was you said right at the beginning, no exit tax.
No exit tax as far as I can see, which is good. Again, was a very light, might be in play. Let's think about that. But nothing at the moment, which is surprising. But then again, if the tax rate's only going up to 24%, around 39%, there's no need to kind of latch onto people because people won't be leaving anyway. Well, yeah. Most people won't be leaving because of the changes.
Yeah, most people. If we look at corporation tax then, because obviously some people look to add their crypto into a company, depending on the levels, and it is very, very specific to each individual person. And I did a video with Joe on this, and this again, it was quite a broad brush stroke of a video because you can't cover every eventuality. But corporation tax is capped at like 25% if we go to the higher. But now we've got capital gains tax as an individual hire at 24%.
Yeah.
So rather than 25%, it's gone closer, 24%, 25%. What are your thoughts?
So with companies, we have to remember a few things. It's not just about the tax rate. So straight off the bat, it's already cheaper to hold it individually, that is for a company, for corporation tax purposes. Now, even if it went up to say 30, 40%, you have to think of the other costs involved. For starters, usually it's more expensive to deal with accounts than it is for an individual's tax return. So you need to take into consideration that. On top of that, once you earn the money, the gains, whatever it is through the company, you have to extract it to use it personally. So if you want to go out and have a lovely meal with your wife, that's probably going to be a personal expense rather than a company expense. So you need to pay taxes to extract it, whether it's through your PAYE income, so it's income tax regime and tax rate on the balance of it all, or whether it's a dividends, which at the moment, the minimum is 8.75%. So chances are it's going to be more beneficial to hold it individually. Now, some people may have, just before the budget, decided to dispose of their assets into a limited company, okay? And that's fine. Now, please be aware now that if you want to reverse it, so you can buy it back, as long as you do it, I think it's within 10 days from a limited company, within 30 days for the individual, you'll reverse the whole thing. Again, this is a very broad stroke, but have a look into that if you've done that, to try and mitigate that. And if you do want to reverse it, that's perfectly fine. But yeah, so I would not, generally speaking, advise people to put crypto into a limited company at the moment. If you are someone who has a high amount of rewards, so so staking, or maybe it's airdrops, or you're earning your income via crypto, so crypto is just the medium in which you are paid, then yes, that will be a whole new different case than someone who's just generally invested into the crypto space and more likely to be incorporated. Now, just to round that off, because I know the questions will be around, oh, am I a trader? And we've covered this a lot, so I won't go into too much detail. Please remember, it's unlikely for you to be considered a trader. HMRC has already said that. And what is the difference between a trader and a general investor? A trader would be under the income tax regime, 20, 40, 45%, rather than 18 and 24% capital gains tax. And you'll have payments on account as well, which is just a cash flow issue and all sorts. But you're very unlikely to be in that situation. So don't panic if you think that's the case. There's something called the badges of trade, 9 questions to see if you are a trader or not. And in this situation, this particular case study, that or not would be a capital gains taxpayer. Another reason why HMRC don't like that either is because with capital losses, you can claim it now or in the future. With income losses, you can carry it back, you can carry it sideways against your other income and forwards. And it's a much higher rate of relief, i.e. up to 45% rather than now at 24%. So HMRC don't like to see that anyway, which is probably good for everyone.
Yeah, no, definitely. I think if you're, as this what I kind of alluded to in terms of it depends on the level of funds, I think as well, because if you're, it's something we touched on with Joe that I don't know, we're just taking a broad figure of $1 million and you hold $1 million, whatever, dollars, pounds, euros. But if you hold $1 million worth of crypto and we're entering a huge bull market potentially very soon, and you stake a lot of that and you get large returns through staking, then you're saying that's coming on the income tax regime. It's likely to be a very large amount. It's likely to be at least higher or additional rate, 40, 45%. Therefore, that then is worth it because you're going to pay corporation tax at 25%, not 40, 45.
Even then, it might not be worth it because it depends what have you invested $1 million into. If it's a stable coin, then yeah, probably, because the capital gain on a stable coin will be next to nothing. Whereas if it's something like a mid cap or even a small cap, again, I don't know why someone would put that much in it, but each to their own, then we have to then go, okay, so your staking rewards, what's your estimation on how much that would be? 2 million a year, $500,000 a year in staking rewards. Okay, but what do you expect the gain to be after you receive that? And are you disposing of it to a stable or fiat? No, I'm keeping it. Okay. And that particular crypto, I don't know, Cardano, for example, are you expecting that to moon? Oh, yes, I'm expecting a 5x. Okay, so you're expecting your capital gain to be in excess of 5 million, if not more, depending on your rewards per year. But your rewards $500,000, but that's being taxed at a higher rate of up to 45%, but your capital gains is at 24%, and then we have to look at the numbers and go, right, do we still want to incorporate or not? Because that gain might be outweighing the miscellaneous income in that situation, and it's a very difficult position. Whereas if it's stable, it's easier. If it's sort of your blue chip Bitcoin, and dare I say Ethereum's a blue chip now, I don't know, but that might be less likely to have a 50x or 5x at this point for the next year or so. So yeah, it's a very complicated situation to get it right, and you kind of have to guess and bet on yourself, really.
Yeah, work out the numbers as you said, but that's why I said it's got closer, because before it was 20% capital gains tax. So if you're in that situation, it's a bigger difference to corporation tax. But in your example, there's only a 1% difference. So 1% difference off, I think you said 5 million, a 5 million gain.
Yep.
Versus 45% income tax of 500,000. It's less of a difference.
Absolutely. And in that situation, although that 5 million that I said increase in capital gain, that 1% difference may or may not be outweighed by that 45% to 25% difference on such a small amount. Yeah, it's really interesting. I get this question asked a lot, and it's a difficult one because there's no one answer for all, I'm afraid. It depends on your situation. Like, do you have a spouse? Do you have other businesses? Where do you live? Do you plan on leaving the country? What's your future goals? What did you have for breakfast today? Maybe not that far, but we need to know a lot of information.
Yeah, definitely. It's kind of bring this to an end, really. But what do you think about and this is not relevant directly to crypto, I'd say, but what do you think about them abolishing the non-dom tax regime? I know this was in play anyway, so this was regardless of who won in the general election. this was going to happen anyway, I think. What are your thoughts?
So, with the non-dom status and the remittance basis, effectively, in a nutshell, this is where someone isn't born in the UK, comes to the UK, but has money outside of the UK. And I know Rishi Sunak's wife is a famous example of how this works and the tax savings involved. Now, the abolishment of this would, I think it's a good thing overall, because it should mean more taxes for the country for those coming to live here. But it might also affect those who are of good talent and that we would like them in the country, if that makes sense. I don't know, there might be someone famous or someone important that can really boost, like a famous scientist or something, that might hinder them from physically being in the country for too long. So swings and roundabouts, I think it's a step. Honestly, too soon to tell if it's a positive, negative step. I think the tax receipts will increase from this decision, which again will contribute towards that £40 billion black hole that we are currently in.
So what are your final thoughts? You're still bullish about crypto in the UK then, based on these changes? Is that your overriding thought?
I'll be honest, I think it's fine. I'm bullish on the tax rates and how they are and those in the UK. However, the word crypto was not uttered once in the budget. It makes me thoroughly disappointed. Rishi Sunak had a great start with the crypto hub narrative. Yes, that died down. I'd not heard anything about Bitcoin or CBDCs anymore, which was a huge push at one point or another. And although I don't agree with those, at least it was a narrative within the UK to be a crypto hub. So am I bullish? Your question was, am I bullish on the UK and crypto? I'm bullish on the UK. I'm bullish on crypto. I hope they do better in making us a crypto hub, because right now, I think they've dropped the ball. They need someone to come in, experts in the area, and I'm surrounded by some wonderful people and wonderful communities that can help the government directly or indirectly, and we've been reaching out to help push a narrative or two. So tax rates going up, fine, not as bad as it was. Bullish on the UK as a crypto hub. Yes, they just need to sort it out.
Yeah, that's Crypto UK, isn't it? The membership of Crypto UK.
Yeah, there's a few communities. The main one I'm part of is Crypto UK. We're starting to make some moves in terms of pushing forward as a group and making some changes where we possibly can, and coaching those in position to help to do so in a positive light. And the main one being having crypto in the forefront of your mind and understanding it, I guess, from at least a very basic level, so we can be that crypto hub at least one day soon.
Yeah, definitely. They are still testing like CBDCs and stuff. I did a video on that recently. They are still testing that in the background.
It's just not main news anymore. I don't see it all over the place as I used to, and seems to at least taken a back seat, I suppose. But yeah, I'm glad they're still testing it. Hopefully they just do a better job than what I read that was going to happen with them anyway.
Yeah, definitely. And I know the Conservatives were looking to implement stablecoin regulation or legislation for stable coins, and that was put on hold due to the general election. So a bit like you alluded to, I think it will be interesting to see if they come back to that under a new government and new people in charge, or if that just kind of gets brushed under the carpet. I think that'll be quite interesting.
Absolutely. And without getting too far into politics, the amount of people that would vote on a party almost purely basis or a large proportion of the reason being surrounded by a crypto narrative of some kind, it could really swing an election in the future, genuinely. We're seeing it in the US, if I'm perfectly honest. I know it's not all of it, but it's part of it. And I just ask your viewers to sit there and think and go, look, if in the next election, someone came out with a strong crypto narrative, something that makes sense to bring us to a crypto hub, how much would that sway your vote? Genuinely. Just have a think. I'm not asking you to post out. It's not about politics. Just a good thought, to have and stretch your brain cells and figure out, how that would affect you, because I'm sure many people would feel the same.
Yeah, you've got in the US, you've got these large PACs, haven't you? So Stand with Crypto is a big one. And I know that they have branched, so there is now a Stand with Crypto UK.
Always? Yeah.
Yeah, so it's interesting to see that coming from the US to the UK in that way, which I think is just positive to try and kind of increase the awareness of crypto.
I agree. And I also believe that we need to increase the awareness of Bitcoin specifically. I'm not a Bitcoin maxi, not by a long shot, but I do believe Bitcoin needs to have a very clear separation from altcoins, because that's the thing. Every other coin is an altcoin. Bitcoin is really going to do something in the future. I just personally don't know what. So yeah, both crypto as a general and Bitcoin specifically, and that needs to be educated to the country as we are doing right now in terms of taxation specifically. But yeah, looking forward to seeing what we do actually.
Oh, honestly, thank you so much, Jamie. It's a pleasure to have you on, just to have these discussions. Kind of, we sometimes go off on a bit of a tangent and it gets a bit nuanced, but honestly, just thank you.
No, my pleasure. And it's all live and off script, I suppose. So it's all nice to have a genuine, open discussion with someone who gets it and be recorded for your viewers. But yeah, always my pleasure. Happy to turn up whenever. Just a reminder to your viewers that 1 hour free consultation is still there if you guys need it. All I ask is that you take it if you need our services. It's not for a general chat. There will be an initial 15-minute call prior to that as a screening to see who's best to look after you, because it might not be me. We've got a huge team. It might be someone else. So yeah, just a reminder for those couple of bits for your viewers.
So to end this video, I'd like to share 2 examples with you to run through what the changes could mean at the lower and higher rates of capital gains tax. So if we start looking at a lower rate taxpayer, so if your income and your capital gains from crypto are less than £50,271, which is the higher income tax rate band, from October the 30th, 2024, then you'll pay 18% on these gains, not 10% as previously. So let's say you earn £30,000 per year as income, and you make gains on your crypto of, let's say, £20,000 in an upcoming bull market, just as a very rough example. And I do understand that it would be difficult to invest in crypto on that salary, but that would make your total taxable gains amount of £50,000, just under the higher income tax band amount of £50,271. So you would pay the lower amount of capital gains tax at 18%. So if your crypto gain was £20,000, you could take your AEA of £3,000 off this to make it £17,000. If you had a spouse or civil partner, you could gift some of your crypto to them also, and they could use their AEA also, which would effectively bring it down to £14,000. And the capital gains tax bill would therefore be 18% of this, which is £2,520 due on your £20,000 gain, which would leave you £17,480 of your £20,000 gain. And to put this into perspective, if the government hadn't increased capital gains tax and had kept it at 10% at the lower rate, in this example, you would have actually kept £18,600 of the £20,000 gain, which is over £1,000 more due on tax, even though you're not a higher rate income tax payer. So this is the argument against increasing capital gains tax at the lower amount, because you're certainly not taxing the ultra wealthy, such as the millionaires and billionaires here. But remember, as Jamie mentioned earlier, that if your crypto gains put you above £50,271, but your salary wasn't in the higher tax bracket, so let's say £30,000 again, then you would still pay the lower rate of capital gains tax up until that bracket of just over £50,000, after which point you'd pay the higher rate of capital gains tax. So let's now look at a higher rate example, which would impact most crypto investors. Because if your income and crypto gains are higher than £50,271 after the 30th of October 2024, you'd now owe 24% tax to HMRC on your gains, not 20% as previously. So let's say you made a gain from your crypto of £100,000. Again, just as a rough example, you could again take the AEA of £3,000 off this, as well as gift some crypto to your spouse or civil partner, who could then use their AEA, which leaves your crypto gain standing at £94,000. 24% tax on that gain works out at £22,560. And remember, you would need to pay this to HMRC in pounds, so you would likely need to off-ramp to be able to pay this tax bill. But after deducting this tax from your £100,000 gains, you'd be left with £77,440 of your 100k gains. And if we compare this new 24% capital gains tax to the previous 20% capital gains tax rate, you can see that you would actually have kept £3,760 more of your crypto gain at 20% than you'd need to pay now, keeping £81,200 of the £100,000 rather than £77,400. So hopefully it's helped to go through some rough examples, but that ends this video. And as always, I'd love to know what you think in the comments below about it. Just a reminder that if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Miner, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.